Good evening, everybody. Good evening. Welcome to Admiral Markets Market Pulse Weekly Update number 7 for the 18th of December 2024. Great to have you here, joining us both in the session and on the live stream. It's fantastic to have you all here. Thank you for joining us for what will be our last Market Pulse of 2024. So lots for us to talk about and discuss and cover in preparation for what is undoubtedly going to be an interesting and eventful 2025, both in life and markets, as always, ladies and gentlemen. As always, for those of you joining us here for the live sessions, I hope that you can hear me, I hope that you can see me, and I hope that you can see the slides. Always good to know that the technology is working in our favour to begin with, rather than fighting us. Yeah, if you're here and you can see and hear me, and I think that's a great start for us all. As always, okay, we look to begin with a quick risk disclaimer. You can just take a few moments to make yourself aware and available to that. Just remember that trading on margin does involve risk, and that ultimately you are responsible for your own trading decisions. As always, for our Market Pulse session, what we look to talk about for our agenda is, how to understand and analyze global financial markets, how investors and traders can turn their analysis into their own advantage, and also how can you trade and also invest with Admiral Markets. As I say every week, I appreciate that some of the people joining us, whether it be live or live stream or watching this later, some people will be very much on the sort of trader's pathway. Some people will be very much on the investment pathway, and some people, like myself, are a bit of both. What we do is we always have enough in this session for both the traders and the investors. Something that is always you can just take note of, take away, add to your own watch list, and help build into your own trading plan and your own trading journey. For those of you who don't know me, my name's Paul. I started trading originally back in the many years ago, okay, back at the sort of dot-com boom, and traded for hedge funds, traded for clients. Primarily, I like to focus on trading FX indices and commodities, and I tend to be a trend trader for my longer-term position trades, and then I tend to be a sort of intuitive and sector-focused investor. And so I'll be sharing elements of that as we go through our sessions, not tonight, but in the future, and I will give you a little bit of idea about how I like to operate and share with you some of my own thoughts and ideas. As you hear me say every week, what I talk about is that, I have, I very clearly use two separate, different Admiral Markets platforms. I have the Admiral Markets Invest MT5 for investing and the Admiral Markets MT4 for trading. And the reason being is that it helps me operate at my best when I know when I'm operating as a trader and when I'm operating as an investor. It makes it simple, makes it easy for me. I have learned the hard way over the years that keeping things nice and simple with clear boundaries and clear guardrails is what helps me operate effectively. And so just sharing that with you. So just in case that resonates with you from your own experience. I also appreciate that there are people here joining us for the first time, or they are joining us at the start of their trading and investing journey, and so may not necessarily be fully au fait with who Admiral Markets are and what they can offer you. Well, Admiral Markets are a brokerage that provide a wide range of financial instruments and various asset classes. They also provide a comprehensive education suite, of which these webinars are part of that, and you'll see that there's, as we're about to go in, we'll put a few slides up on the many different ways that you can engage with financial markets, either as a trader, as an investor, and also some of the technological solutions that are available to you as a client. As I said, there is a broad and wide range of educational support, okay, regular webinars, live market analysis, the premium analytics portal, the research terminal, which fits into both MT4 and MT5, and then also the Academy platform you can utilize to help. So there's a whole range of support options there for you, and I'll be sharing a few of them as we go through our sessions, and hopefully that, as I said, help you on your own journey. So for those of you that like to focus on the trading pathway, well, as you can see there for trading, Admiral Markets provide over 4,000 available instruments as FX and CFDs on commodities, indices, stocks, providing a sophisticated trading environment with good industry leverage. Both MT4 and MT5 available for download, and also the Admiral Markets mobile app for those of you who wish to trade on the go. For those of you who prefer the investing pathway, well, for investing, you've got over 4,000 available stocks and ETFs. You can also engage in fractional investing in both shares and ETFs. There is also an auto invest option in the mobile app. And in terms of platforms, you have MetaTrader 5, WebTrader, and once again, the Admiral Markets mobile app to operate with. In terms of some of the technology that's been rolled out this year to help traders, investors, and clients of Admiral Markets, you have the research terminal that's available both MT4 and MT5, and we'll take a little bit of a look at it later. But also have things like VPS, okay, that you can take advantage of, and there are also elements like apps like investing calculators in the dashboard that can help you with, with working out what's required for your own engagements with markets. Okay, so as I said, we always just do a few slides to help keep people up to date on what Admiral Markets can offer for their clients. But the main thrust of this session is always about the market pulse. Okay, it's a weekly update that can basically help traders and investors get an understanding of what's going on in those financial markets, so that you're in a position to make a better plan going forward, regardless of whether you're a trader or whether you're an investor. So we have our weekly webinar series, which we focus on how to navigate through the global markets and filter out the information that comes our way. So every week we take a look at the major themes affecting the markets this week. And what I'll talk about is from here today. This is Wednesday evening, so I'll talk forward for the week forward. We'll have always major analysis of the major global markets, so you have a place where you can come and get an insight and understanding. As always, we will discuss trading and investing ideas and themes, and also sort of talk you through the technological solutions that are provided by Admiral Markets UK, with the aim being to help educate you and also provide insight on markets and the way that traders and investors can engage with them with Admiral Markets. Okay, so those of you who've joined us, okay, for our previous Market Pulse weekly updates, as I said, I always start going from this Wednesday here forward for the next Wednesday. It is unbelievably important to have an understanding of the economic data that is coming out for the next week. You hear me say this to new traders, investors all the time, namely, I do not expect you to be able to analyze all the economic data straight away, but it is very important to know when that economic data is coming out, and you can find that out on an economic calendar. Furthermore, there is always a stream of data, okay, coming out every day, every week, every month, every year. And so my aim here is just to help guide you towards the really most important elements that you definitely want to be aware of, for today going forward for the next week. So in terms of this week's themes, well, as I said, here we are, we're about 7:10 UK time. First thing this morning at 7 o'clock this morning, we had inflation, okay, numbers out of the UK at 7 o'clock this morning, sterling. They were not higher, not necessarily higher than expected, but what it did impose on us is a knowledge that invariably inflation has not peaked. Okay, inflation, especially in the services sector in the UK, is still very sticky. Inflation is still ticking up since the not only the election but also since the budget in October by Rachel Reeves. That has an impact. Okay, that has an impact just as an individual, in the way in the streets, in terms of, prices not coming down, or prices, sort of continuing to rise. It also has an impact because tomorrow midday, we have the Bank of England monetary policy statement. People weren't expecting a cut tomorrow in the UK, but the data this morning from CPI and yesterday from jobs, and also PMIs to an element on Monday, basically ensure that there's very little to no chance of a cut happening tomorrow, because, as I said, the inflation remains a bit too sticky. So, of course, if there's a change in that, or if there's a change in the statement, that divergence will cause, ripples in markets. That's what brings in the volatility. That's what makes, traders, investors happy when they're on the right side of the volatility, or a little bit challenged when they're wrong side. So, as I said, we had CPI numbers this morning in the UK, and tomorrow, we will have the Bank of England monetary policy statement. Before that, though, of course, we have a couple of bits of important data. The first one, which is happening right about now, as we speak, and I might see if I can bring it up on my other computer here, is that tonight, 7 o'clock London time, we have the FOMC statement, and invariably we have been expecting, the cut in the interest rate from the US Federal Reserve from, I think, 3.75 to 3.5, and that's what people have been waiting for and looking for. And really, remember, markets there are futures discount mechanisms, so they invariably are, that kind of cut has been baked in. What people are interested in is, well, what is the trajectory? Okay, what's the future trajectory? Okay, will there be more cuts? If so, how fast will they occur? And people will be interested to hear what, if anything, Mr. Powell and the Federal Reserve have to say about that. Tomorrow morning, tentatively, what we're also supposed to have is the Bank of Japan with their monetary policy statement. Now, a few months ago, people were getting excited that the Bank of Japan might be hiking rates, when everybody else in a sort of G10 or G7 was kind of cutting them. That situation is kind of changing now, and I think the window for any Bank of Japan rate hikes is kind of subtly diminishing. People are not expecting them to cut tomorrow. However, if there was, either a cut or a change in the sentiment and in the statement, that, as I said, would once again bring in volatility. So you have the FOMC this evening, Bank of Japan overnight into tomorrow morning, and then the Bank of England, at lunchtime tomorrow. So, big data, especially when we saw, quite a lot of the central bankers last week. Those of you who joined me last week, we talked about it, Canada, they cut, the Swiss cut, and they cut by 0.5%, all right, as opposed to 0.25%. The ECB, they cut by 0.25% as well. So there has been, as I said, an awful lot of cuts going on. It'd be interesting, which we'll look at in a moment, that, if Mr. Bailey at the Bank of England doesn't cut, that will also sort of underpin some of the strength we've seen in sterling over the last week or so, which we will look at in a moment when we look at the live charts. We also have tomorrow, we have unemployment claims, in the US. Friday is retail sales, 7 o'clock on UK morning. Of course, people will be naturally interested in that, just because we're into a new administration, and also to see what the sales have been like in the run up to into Christmas. We also will have retail sales in Canada, but also the PCE, the Personal Consumer Expenditure Index, from the US on Friday afternoon. That's interesting because it is Mr. Powell and the Federal Reserve. It is their preferred indicator that they utilize to understand and plan their battle against inflation. So even there, as I said, even just, tonight, tomorrow, and Friday, we have got a busy, what would you call that? Busy sort of, 72 hours, all right, coming up for us that we'll be looking at. Lots happening, and as I say, important to keep on top of this order flow. Not unsurprisingly, once that happens, then we start to sort of tail off in terms of data and volatility as we run into the festive period here in the West. So Monday, we've got a little bit of GDP from Canada and some consumer confidence from the US. But really, after that, it's it is very quiet, as I said, as we run into that festive period in the majority of the West. So lots of people will be getting lots of their data, lots of their trades out of the way this week, so that they're in a position to sort of, take a little bit of time off from next week for the next couple of weeks. And maybe we'll see that when we look in the charts in a moment. Before we do look at the charts, as always, you know me, I like to set some expectations. Okay, and the more you hear it, the more it kind of embeds as the sort of the baseline from which people should be operating, regardless of whether they're operating as a trader or an investor. Risk management is always absolutely key, ladies and gentlemen. Make sure that you honor it. If you're at the start of your journey and still trying to understand risk management, if you go to the Admiral Markets YouTube channel, you will find, okay, on the YouTube channel, you will find, archived videos there, okay, that myself and my colleagues have created for Admiral Markets there that will help give you some real insight into risk management. So please, if you're going to have some time off over this festive period, that would be a great suggestion for you to be absolutely on top of your risk management. What news is coming out for the week? Well, hopefully you can see that I do, and share it with you, which are the pieces that you really should be looking at, because as I said, that's important. That news can induce volatility, and we want to plan around it. Ideally, conduct your analysis before making decisions. So my longer term position trading, okay, in particular, I like to do the work at the weekend when the market is closed, looking at weekly charts and daily charts primarily, and a bit of the monthly charts. But I find personally for myself, for my longer term, I'm better when the markets are closed and I just have a bit of peace and quiet. And I sit down for 90 minutes and I do my work. Now, I'm not suggesting you need to spend 90 minutes. Some of you may spend more, some of you may spend less. But this is my role, it's my job, it's what I do and stuff. So I find conducting analysis before making decisions does help me. Okay, and that's just let's say a well-earned and well-learned, okay, rule of trading and investing for myself. Not unsurprisingly, ensure you have good internet connection, all right, as always, before you're going to engage with markets, and ensure you're rested and prepared, all right. If you've had a bit of a bad night's sleep, if you've been out at the company's Christmas party and you had a bit of a late night at the disco, maybe next morning might not be, you might not necessarily be at your sharpest to be making trading and investing decisions. You might want to sort of look at how you can manage that. And just a sort of a technical note, okay, even though I will talk about trading and investing, for long-term trading and long-term investing, we are looking to be long-only buyers. I will do my analysis from both sides, but for long-term trading and investing, we're looking to be long-only buyers. Those are the opportunities we are looking for. And for those of you who are new to trading, new to investing, new to joining us for our session, just so you quickly understand my charts, I keep them as clean and as simple as I can. Blue or green bullish candles, red bearish candles, a blue 20-period moving average, a red 50-period moving average, and a green 200-period moving average. Plus some fractals there, okay, to help me identify and understand the supports and resistance, and also significant swing points as well. So to try and keep it as nice as possible. I appreciate that lots of people will be aware of Admiral Markets for their trading, but also we want to make you aware of what we can offer in terms of investing. When with an investing account from Admiral Markets, you can buy all of the UK shares mentioned in this webinar, and all you need to do is to open an invest.mt5 account from the dashboard. You can either have it as a web trading platform, or like you'll see from me, download the MT5 platform, and then you'll have access to UK shares and also UK ETFs. Okay, so let's go and switch across to the charts. Just remember that the Market Pulse weekly update, this will be the last one for 2024. We'll be back on the 8th of January, but 7 o'clock London time, okay? Join us, Market Pulse weekly update. Have a look at the major themes affecting the week. major market analysis for major global markets, and also talk about sort of trading and investing themes that we have there. So, as I said, we will be back on Wednesday, the 8th of January. Okay, just to remember that, put that in your diary. You can have a little bit of a break, and then you can be ready and excited to hit the markets next year. So let's switch across to the chart, shall we? Let's go and have a look at what's been going on and have a talk there. So if you just bear with me for 1 second, we will switch across. Okay, I'm going to start with. Okay, so I'm hoping you can hear my voice and see me, and I'm hoping you can see my chart. So, as I said, I use both the Admiral Markets MT4 and the Admiral Markets MT5. The MT4, the Invest MT5, okay, and the Trading MT4, and I just find for me it helps me to just know when I'm being trader Paul, and it helps me know when I'm being investor Paul. Okay, because the two have separate rules. Okay, I have different outlooks in terms of what I'm trying to achieve, and so we're looking to understand that and see what's really occurring and happening there. So as always, let's get the old drawing tools up here. As always, what I have here is I have a profile, okay, a profile that I have for indices, and I have here the Dow Jones, S&P 500, the NASDAQ, the ASX, the Australian index, the Germany 40, which is the DAX, the FTSE 100, the UK, the Nikkei, and then the Hang Seng. So, as I've said, when you join me every week for this is what I look to use as a kind of, let's say, a snapshot. In one quick view, I can get an idea and an understanding of what's going on in markets and try to sort of just help us in terms of building a picture of what's been going on. So I said last week that, when you look at the dominant trend, okay, the dominant trend in the American indexes has been, for the most part, we are still bullish. Aren't we? We are still bullish. Okay, that's it. And it might be said also for the ASX and also for the DAX. Okay, the dominant trend is still bullish, but we're getting a little bit of divergence. We're getting a little bit of change. We get a little bit of happening here, and certainly we can see the Dow. The Dow has been fascinating. Okay, if you look at the Dow chart on the weekly, that has been, that's been a fabulous uptrend. All right, that's I tried to get across to new traders and investors that you're always looking. Good trends leap off the chart at you. You should not have to force them. All right, if you are forcing it, it probably isn't a trend. The challenge, or the flip side of that, is that markets tend to only trend 20 to 30% of the time. That is clearly still in a very dominant bullish uptrend of the weekly chart, which is what I like. But if we look at, here we go, here we are at the Dow Jones on the daily chart, I think we can see that is just quite some move. We've moved beautifully, all right, really. We pull back to the moving averages, okay, and we work away up. We pull back to the moving averages, we work up. We pull back to the moving averages, we move up. And then we had this kind of double top here. And then if we look at this, that this is kind of, it's unheard of, I think, really, in terms of having a 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, okay? 10 daily candles that are just basically, now admittedly, this one hasn't closed today, but, it's not looking very bullish, I would suggest there. Now, of course, it could change in the next 90 minutes or so, but I don't think that's looking terribly bullish at the moment. But that is quite some move there on the Dow, isn't it? That is quite some, that's quite some sort of pullback. That's a real retrace there, real retrace happening there. And there's lots of different narratives as to why that is occurring. Okay, and you can understand and find your own particular narrative. Me, when I look at that, the shorter term trader Paul is fascinating and loving being able to short that. But I'm interested to see how we can see here price was at the 50 and it bounced. We can see here price was at the 50 and it bounced. We can see here so far we have not bounced, have we? We have not bounced. We've closed beneath the 50. Today's a little bit bearish as well. It's tried to push up, but it can't. And so we're just kind of looking at that. Is the 50 going to act as support as it has the last two times? Or are we going to falter that? Because if we falter that, well, then I actually look as going down to here. It's around about, probably say just in front of 42,000 on this chart. That's what I'd be looking at. Okay, and the Dow, that makes for some quite interesting charts there. So what we see. So that's the Dow. Now, if we look at the other two indexes, okay, we can see S&P 500, once again, weekly chart, beautiful trend, all right, beautiful trend. When it's in a beautiful trend, you don't fight it, you try and find a way to join it. But even when I go to the daily chart, okay, we've just seen the Dow really drop off. The S&P is not in any way the same way, but it has just been a little bit. It's just been, it's taking a little bit of peace time. I might actually just bear with me a moment. I might just make that a better drawing. As I say every week, I'm a better trader than I am an artist, ladies and gentlemen. Okay. But I'm hoping, Bosch, maybe you can just see that there. I just wonder if that's a very sort of shallow bull flag there. Okay. If it looks to break in it, well, then I'd be looking to see it to go to the 50. But it's different from the Dow. And then if I look at the NASDAQ, okay, NASDAQ was lagging the other indexes, but has raced ahead there. But even this week, okay, we are, we're just been pulling off a little bit there. Okay, just slowly been pulling off there. I've just gone down to the hourly chart, okay, and there we go. We can see this is the response to the FOMC data. Yeah, you can see that is a real strong sell off there on the Nasdaq, okay. And just looking at it a little bit more, a little bit, no surprises, a little bit of reaction there, but that's kind of telling us a little bit there, right? But as I said, the trend, the long-term dominant trend is still bullish, but I would be worried about this, okay? And I'm waiting to see, can it bounce? Can the Dow bounce? All right, that's what I'm looking as as my inflection point. We can see for those of you who like the Asian indexes, well, we can see that the ASX has been a bit like the American indexes, has been in a nice trend. Yep, I'd suggest it's pulling back there a little bit, but it's still the dominant trend is still to the bullish side. The Nikkei is the interesting one here. Is that we've talked about this a bit in terms of the Asian indexes. I was looking at whether we were building a kind of a big weekly sort of head and shoulders pattern, with a real coil here, okay, a real coil. And I thought perhaps maybe we break out there, okay, last week and drift our way up to these kind of recent highs. But you can see that it failed, didn't it? The breakout failed there, okay, and you can see how it's kind of working its way over. Now, of course, if I just go to the daily chart, they're just kind of like working to work it up, to make it up there. Oops, I'm going to slow down a little bit. What we are looking for is a case of, can it just ride out the Bank of Japan release in the morning? Okay, that's what they're kind of particularly looking at. If that's going to fly, will that particularly, how will that operate there? So I would be coming back probably, this time tomorrow to have a look at how that has basically particularly operated there. At the moment, I see that as kind of prices just coiling up towards the end of the year. Hang Seng is just doing its own thing. It still looks very differently. But if I start to look a little bit closer to home, starting with Germany and the DAX, once again, that has been in a great trend. We pulled back earlier. We did a really lovely bullish pin bar here that launched us higher. And now, but we can see, there's a little bit of if we just look at that, there we go. We can just see that over the last week or so, we've just had a little bit of a top there, I'd say. Okay, a little bit of a bit of a false breakout there, and we've dropped a little bit there. But I'd be working to see how that impacts. How that impacts over the next day or so in terms of with the reaction to the FOMC, reaction to the Bank of Japan, reaction to Bank of England, which at first glance may not seem to have a direct impact on things like on DAX, but what we are seeing is, what impact will those events have on Europe and the euro? Okay, and then the effect that it has on that. what we'll see having an effect on the DAX as well. So I wonder whether we're getting just a little bit of profit taking towards the end of this last major week. Okay, maybe a little bit of profit taking. Certainly, certainly if you've been long for most of 2024, you might want to basically, if you're an institutional trader, you might be sort of, taking a bit of that good work off the table just before the start of the end of the year. And then we have the UK. Listen, we've spoken a lot about this, and you've heard my ideas about it. Namely, for the most part, we are stuck in that range between about 8,100 and 8,400 there, just working its way. We came down here and I talked and I thought, if it breaks the 50, well, it's got a long way to go, but it bounced and went back up towards the 8,400. But then you can see here, there's wicks here to the side, and we've now rolled over here. If you look at that, if I go down to the daily chart, you can see, we're kind of rolling over beneath the 50, and so it would not surprise me for us to go down at least to that 8,100 area, sort of just to work its way off there. That's what I'd be particularly looking at. Okay, so I think we're at a bit of an inflection point. Okay, it's a case of people probably taking some of their gains and profits off the table from the institutional side just in front of the festive season. But then, of course, also there'll be people de-risking because effectively a month's time, we'll have the inauguration of Mr. Trump. And it's one of the reasons why the economic data is so keenly watched, because people are keen to see what kind of economy is Mr. Trump going to inherit, because that undoubtedly will have big impacts on major institutions' investing decisions for 2025 and beyond. So the indexes, they're taking a breather. Okay, we'll wait to see whether it turns from being a breather into a particular retrace. Let us have, because we've not really looked at it, I'm going to very, very quickly have a little look at commodities. So what we'll do is we'll look at the big indexes, we'll look at commodities, we'll look at the dollar, we'll look at one or two of the other currencies. Always like to talk about sterling, and then we'll have a look. That will lead us into looking at the UK market, okay, on the MT5 as well. So in the same way that I have a profile for the indices and for the currencies and for some equities, I also have one for commodities as well. Okay, but once again, I'm always just looking to see what's just to get a snapshot, how I can see, and can I see any very clear trends. Now, I appreciate I've been doing this for a long time. I do this every day, so I practice an awful lot of it. So my ability, the cognitive recognition ability to identify good trends, good trades, it might well be faster than yours. That's okay. That doesn't mean you are a poor trader and investor. Okay, not in any way, shape, or form. Right? We're all on a journey. We all go at our own pace, and we work our way with that. So this is commodities. So what have I got in here? I've got gold, Brent, oil, palladium, natural gas. Okay, a dollar index, platinum, West Texas, and silver. Okay, so these are all instruments that are tradable on the Admiral Markets platforms. Okay, so it's a kind of same analysis that I look at in terms of, I like to do a lot on the weekly chart. Okay, I find the weekly chart is a really good one for me. All right, because it means I can do longer term position trading off the weekly chart. Or if I want to do short-term trading, I can break it down into the lower time frames. Okay, so it works well for me. Okay, for me. Let's have a look at gold though, because I appreciate there are lots of people who are either trading or investing in gold. And once again, I've said this, well, not only this evening, but in all the webinars, that a good trend leaps off the chart at you. Okay, that's the weekly chart for gold for 2024. That is just a lovely trend. That is a lovely trend. And when there is a lovely trend like that, the question is, and the message I try to get across to traders and investors is, when there is a lovely trend, don't fight it. Don't fight it. You don't want to fight it. You want to try and find a way to ride it. Okay, I keep saying, you're like a surfer on the ocean. A surfer knows they can't surf every wave. So what they want to do is they want to wait and catch the best waves. And that's a bit like a long-term trader and investor. You are looking to catch the best and longest trends, and this is it. Furthermore, for a new person, that does not mean you have to capture the exact bottom and the exact top, because some people think that you have to capture every piece of that. That's rubbish. Okay, that's rubbish. If you challenge yourself to do that, you will find trading and investing very challenging. As a trader and investor, okay, when you're in a good trend, even if you can just capture a piece, okay, even if you can just capture a piece of that trend, that is really, really good work. Okay, that's really good work. So we've had that fabulous trend, but the way I look at this is this: we peaked here just in front of the US election. That's a nice pin bar rejecting candle. We kind of fell back, and where did we fall back to? 20 period moving average, which is what we've seen, and then price has had a little bit of a bounce up. But I'm curious here, because the way I look at that now is that is now a lower high. Okay, that's a lower high, and so now I'm kind of curious to sort of see, well, okay, at the moment, let me just clear this. At the moment, the 20 period moving average is acting as support. Okay, so it could still bounce off that and go back to the highs. It could, all right. That's perfectly feasible possibility. But what I'm also looking at as well, okay, let's just try and draw this in here. Is there a case of that, we start to work our way into a bearish channel that becomes a kind of a possibility of a bull flag? That trend line now gives me some incentive, or maybe not incentive, but gives me an indication of resistance. If price for me now needs to break back above that level to give us the drive to sort of move our way up there. Excuse me. It's been a long day. It gives us an opportunity for us to move back up to that high. But equally, we could just carry to work on in this channel. So I look at this as a lower high at the moment. If it breaks that 20 and closes the other side of it, well, then I wonder whether we kind of work our way. A scenario might well be that we kind of work our way down into this zone, which would be where the support and trend line is, and probably where the 50 period moving average is. So that would be one possible scenario I would look at. Okay, that's possibility, and there are sort of tactical trades within that, but that's what of me just watching that. Along with gold, we can have a look at silver. Silver also, here we go. Silver also had it's not been anywhere near as clean a trend as gold, but you can see that we have had periods of uptrends, and we, like gold, we peaked just in front of the US election, and then what's happened here is we fell back to the $30 mark. Okay, $30 mark, which had been resistance. We're looking at the moment it's support, but just like gold, in the same way we had a high here followed by a lower high, the same has happened with silver there. I'm hoping you can see. So I'm just kind of going to go down to the daily chart here. Yeah, this is the daily chart for silver. And we might have talked about this the other week. That is a nice false breakout. Off that big round number of 30. We bounced off it, but then we did a real big bearish engulfing, and we've worked our way down here. And we're looking at this candle, okay. And I wonder now if the daily 50 is starting to sort of drift its way down. The daily 200 is drifting its way up. We've got the big round number of 30. Price is wrapping itself up there in the moving averages. I wonder whether we're just getting a coil in front of the end of the year, then followed by an expansion as we start the new year and we get ready for the Trump inauguration. Okay, that would be the scenario I'd be kind of looking at the moment on that. As you can see, there's lots of others. I'm not going to go through all of the commodities because of time here, but we'll just take a quick look at West Texas here. Okay, West Texas. Let me just change my properties on this. All right. So I normally have same way gold. My gold charts, the bullish candles are red gold in a bank. Nope. Here we go. In oil, bang. My bullish candles are black here. Let's see. Is it? Oh no, he hasn't done that. Bear with me one moment, ladies and gentlemen, and stuff. Yep, there we go. Yep. I'm hoping that maybe just needs to take a little bit of time to update. Yep, there we go. There we go. So what I've been intrigued here by with, I think I'm just going to bang. Excuse my trend lines. Maybe not necessarily the most beautiful ones, but I'm just going to put these in here. Just help you draw your eyes towards the kind of areas that I am interested in that might be worth us taking a bit of a look at. There we go. So yeah, I look at this as whether we're in descending triangle, using the kind of $70 level, big round number there as a level of support, which we've seen it happen there. The price looks like it's just pivoting around 70, doesn't it? Down one week, up next week, down one week, up next week. Bit of a mixture of elections, political sort of ideas in terms of what Trump's going to do, also geopolitical events from what's going on in the Middle East and geopolitical events from what's going on in the kind of east of here, okay, Eastern Europe and the rest there. And that is having an impact on oil and West Texas there, okay? And so I think we're just pivoting around there. But I'm also noticing that, all of these major highs, they are lower, all right? There's pressure there. There's pressure building, and I have to wonder whether, well, what's happening? Is this just everything coiling up? A little bit, not massively, so in some ways, a little bit like gold, okay? Gold is coiling up, oil is coiling up, silver's coiling up, all of that. The one common denominator is the dollar, which is what we're going to look at. Now. So let's switch across to the dollar, and we can have a look at how the dollar's doing against the majors. Okay, so gosh. So once again, ladies and gentlemen, here we go. I've got a dollar profile here. I have the dollar index here again, which we're going to come back and look at. I've got Aussie dollar, Euro dollar, pound dollar, dollar Swiss franc, Kiwi dollar, dollar CAD, dollar yen. Okay. Aussie dollar, that is Australian dollar weakness, US dollar strength. Kiwi dollar, that is Kiwi dollar weakness, US dollar strength. Euro dollar, that is Euro weakness, US dollar strength. US dollar, Canadian dollar, that is dollar strength, Canadian dollar weakness. Pound against dollar, that is pound weakness, dollar strength. Dollar against Japanese yen, that is dollar strength, Japanese yen weakness. And then dollar Swiss franc is dollar strength, Swiss franc weakness. Okay. That's why I have my profile set up like this. Okay. And on weekly charts, I can very quickly take a snapshot, whether these are the weekly, I could do it on the daily, I could do it on the 4 hour, I could do it on the hour, I could do it on the 30 minutes, depending upon the time frame I'm trading. But it very quickly gives me an idea of when there is a strong trend in place. If all of these charts are all over the place, if they're all different, then that in itself is telling me something. The market is always communicating to you. The market is always communicating to you. It is your job to learn its language, okay? To learn its language. And that language is not only just purely technical analysis, but also the ability to interpret and see and look at the intermarket relationships as well. But that's telling us there the dollar's strong, isn't it? And when I look at the dollar index, well, of course, we can see that, okay? Bosh. We had a little bit of a dip. For those of you who joined us, we had a little bit of a dip, but that's a morning star there, okay? And daily chart, yeah, we just looked as if we were going a bit sideways for a couple of weeks. After that was sort of around the time of Thanksgiving and Black Friday and all that's going on. We had a little bit of that there going on, but you can see for yourself that dollar strength returned. And if we look at that, bosh, that is the response to the FOMC there, okay? That's response to FOMC. So, what do you think has happened that the dollar has strengthened so strongly? What is it? And I could look at I've got news feeds over here, but I'm going to just I'm only going to very quickly, just so that the news is all absolutely spot on and stuff. But yeah, Fed delivers third rate cut of the year, but halves rate cut outlook for 2025. There we go. Just even in that, in that headline, that tells us. There are going to be fewer rate cuts in 2025, okay, for the US dollar. That is for the US interest rates. That in itself is very bullish for dollar. And you can see for yourself that's what's happened there. Bosh. There we go, ladies and gentlemen. Just look at that. Okay. And, that is just going to continue that dollar strength story. That's what we are working with there. So, I know lots of people like to trade around major news events there. Personally, I have my own particular style and way of doing that, but I normally wait for at least 15 minutes after the news to start to engage. Okay. But you can see, I'm hoping if I just put these all down let me just put these all onto hourly charts. And I suspect the charts will all look the same in terms of Bosch. Yeah. Yeah. There we go. Major dollar strength. All right. Now, you heard me say it earlier. When there's a good, strong trend in place, don't fight it. Find a way to ride it. How can I get a piece of that? How can I just take a piece of that trend? I don't need to or have expectation to capture all of it. How can I just capture a piece of it? Okay. Now, the interesting thing is that I always find it fascinating if I'm going to trade about, 15 minutes, 30 minutes later. But then equally also the next day can be very useful because by the next day, the news has got around the world, institutional institutional desks, shall we say, they have had a chance to get together and sort of assess the news and, work out a plan on how they're going to operate. But yeah, certainly that's been quite some move there, Carney. And so of course, if that dollar is strengthening, as we've just looked at, that means those majors will be weakening because the basically capital will be flowing in towards the US there. So that's quite some that's quite some move there, isn't it? Quite some strong move there. But that's it. All right, let's have a look at Admiral Markets UK. So let's have a look at British pound there as well. So we've seen what's gone on in the major global indices. We have seen what's gone on in some of the major commodities. We've seen what's gone on in the major US dollar. The whole idea, as I said, it's about taking the pulse of the market, getting an idea and an understanding of what's going on so that we are in a position to start formulating a plan of how we want to operate. So what we are seeing here, this is sterling. Okay, this is what I'm just going to put this on here. Yeah, let's in fact actually. No, I'm going to go to the weekly charts, just to the weekly chart here for us, because we can work our way down from that just as we like to look at. Here we go. Super. So we've already looked at FTSE. We know that it doesn't look terribly exciting. If we look at pound against dollar, the cable, okay. Once again, we also know that. Just wait 1 second. We also know that. We've just seen US dollar strengthening. Okay, US dollar strengthening very strongly there. And here we go. Come on. Let's just work away. This is maybe kind of internet slowing down as people get ready to watch the Champions League football. That's what it is. They're streaming that. Anyway, pound against US dollar weekly chart. That's what we're really interested in. We had a fascinating trend, a trend that was ended by an evening star formations. Once again, you will find the videos and webinars of that in the webinar archive that you can find out. And then price has been we've moved down there from highs up there around about 134.50. We've traded down as low as it's sub of 125. Okay, so 900% plus kind of move down there. And here we've been a little bit messy. Okay, a little bit messy. If I go down to the daily chart, part of it, here we go to the daily chart was, as I said, we had a couple of weeks of a bit of dollar sort of meandering, and actually what we had was a bit of sterling maneuvering up, a little bit of move, and I was wondering if it had the strength to carry on. But what we have seen is the dollar has come in, and as we have seen some of the news, okay, the anecdotal news about the strength, or rather the lack of it, in the UK economy, at the same time as we have seen ideas and perceptions of strength in the US economy based upon what Mr. Trump's looking to do. That has just we've just basically had the downtrend re-exert itself there. And as I said, you can see from today that is basically sterling weakness, but dollar strength based upon the fact that they're going to halve the number of rate cuts next year. That will be interesting to see how that plays out with the Bank of Japan tomorrow, and also with what the Bank of England say. So I'm just looking at that for you. That's the 4-hour chart there. From where we started the week, rallying up, the 50-period moving average, okay, acting as quite significant resistance there, wasn't it? Quite significant resistance, and then you can see for yourself, bosh, as the news got up. There we go. That's the way we're looking to operate, and you can see that there's quite some move. If we look at one of the ones that's kind of been intriguing me, all right, is pound against Japanese yen. Pound against Japanese yen, as was in a fabulous trend for the first part of the year. But then, as we ran into summer, we had all those worries and concerns, okay, about what was going on with Japan. We had the political and economic fluctuations there in terms of change, and that basically made sort of trading through kind of August, September, October a little bit fraught, shall we say? But then we had this great little maneuver here that I was looking at. Bearish candles on the weekly chart, nice wicks to the top, and we were rolling over. And I thought we might sort of drift our way back down to around about kind of 185 area, but we can see we printed a morning star and popped up. And if you look at quite a few of these yen positions, there's an awful lot of those star formations that have occurred. And if I look at the daily chart on there, a little bit like the pound against the dollar, we had been in a lovely downtrend, and then it's reversed. And we have seen some strength in sterling. Okay, now the kind of the sort of, let's say, the pro UK, pro Labour government individuals would be saying that this is a reflection of conviction by institutional investors in the UK. Personally, my view would be probably different, namely that it is just that sterling is just not as bad as the other major currencies. Okay, so euro has been had a terrible year, which we'll look at in euro sterling. Euro's had a terrible year. Okay, Japanese yen for the most part had a terrible year, as has the Comdolds themselves. Okay, and Swiss francs had quite a mixed year. So sterling strength has been more a reflection of others' weakness more so than a love for sterling. But listen, you can see for yourself that basically that is what is occurring there this year. That's what's happening this month, and we've been strong on pound against yen. And invariably, news like today, okay, that inflation is still upticking. Okay, it's not coming down. That, of course, as I said, puts pressure on Mr. Bailey in the Bank of England, because he will be under political pressure to cut, even though he would tell you the Bank of England is not, is apolitical. But of course, if the inflation is still high and jobs numbers, okay, the sort of top peak jobs number was high yesterday, as was the services PMI. Services PMI is still building. The manufacturing one weakened on Monday, but it weakened for the UK, weakened for France, weakened for Germany, weakened for the US. So the pound against the yen is here. We're pivoting around the 50 and the 200. Okay. Tomorrow, as I said, is going to be an interesting day, because you're supposed to be getting statements from both Bank of Japan and Bank of England. When that happens, when the two central banks are speaking the same day, I tend to just give it a miss. I sort of just dogleg around it, because there can be an awful lot of volatility. But you can see, we can see there, that we're just pivoting around that 50. What we are looking at here, and what I do want to just quickly talk about before we look at some of the stocks, is that pound against Swiss franc. You've heard me, if you've joined us, you've heard me be here talk about pound against Swiss franc has just been coiling up there, and I thought we were breaking out last week, but we dropped. But now you can see we're trying to break out again on the daily chart there. Okay, it's trying to break out of that trend line. It's trying to break out of that coil. If it does and it's successful, then I think we go to 115, and that would be an indication of sterling strength, but also Swiss franc weakness. Remember, the Swiss franc cut by 0.5% last week. If the UK doesn't cut tomorrow, well, then in terms of carry trade, all right, there is carry there, and that will benefit sterling. And also, as I said, let's have a look at euro sterling here. This is the weekly chart for euro sterling. You can see it's been in the trend. Those of you who've joined us the last couple of months have said, it's been a very, very scrappy trend. Even though the trajectory is down, it has been very scrappy. Okay, there's nothing particularly clean or easy or pleasant to trade. And I was intrigued that I thought we were getting a flush here. And then look at here. This is last week. We printed it's a bullish engulfing candle. It's a bullish pin bar. It's a bullish key reversal, which, would normally be a very, very bullish candle. And we'd be looking for the higher probability for price to drift higher. But you can see for this week that's not occurred. If I go down to the daily chart, and you can see it probably even better on the daily chart. Look at this. Every time we've come up to the 50 period moving average, we've pushed. Here we tried to break above it. We thought we might be making a new breakout, but actually we dropped. We came back up here, we dropped. We came back up here, we dropped. We came back up here earlier this week, we've dropped. So for me, that 50 period moving average on the daily chart is now, is clearly very important, because what we're seeing there is the power and the control that it has in that. Okay, and for this to change in terms of euro strength, sterling weakness, well, we would need to be getting way above that euro sterling to make that work. All right, so there's the major elements of sterling to help give you a little bit of pulse. Let us switch across. I'm going to switch across to the MT5 Invest. Now, as I said, normally on here we would focus on UK stocks and maybe some UK ETFs. But I just thought, whilst we were here, we couldn't really not talk about one or two of the big American stocks, just because they have such an impact, okay, in terms of media and in terms of momentum, in terms of people's perceptions. This is Tesla, all right, TSLA, Tesla on the weekly chart, and you can see, well, you can probably get an idea of when the election happened, and with Trump's victory and Mr. Musk sort of getting himself involved in the US government or the new US administration, you can see what impact that has had on the share price. That has been quite some move there, isn't it? And that is reflection of I think it's a reflection of many things, okay, in terms of A, Musk's influence, B, the overall sentiment and narrative of Trump's administration, which is going to be pro-business. And you can see that on that monthly chart. And remember, we are here on the 18th. We've still got 13 days of the month left, which is probably about 7 or 8, because we're in the festive period, probably about 7 or 8 trading days. But you can see for yourself that is, at the moment, that is trading to all-time highs for Tesla there, okay? And as I said, why would you fight that? Okay, why would you look to it? Why would you look to fight that? And that's the daily chart of it, okay? And daily chart we talked about in I did a couple of sessions on UK stocks back in September, which are on the YouTube channel, so by all means be sure to check them. But I talked about value stocks and momentum stocks. Tesla is very much a momentum stock. Look at that, okay? When you've got a momentum like that, as I said, you don't fight it, you want to work with it. Looking at the other major one is Nvidia. I just always look at just these two, because they are they are the stocks of the hour, shall we say, the behemoths of it. Tesla. Now, of course, we're looking at other buying opportunities. We can see that Nvidia got its way up to the kind of this around about 140. We pushed a bit higher, but then we put in this kind of bearish pin bar there, and we've worked our way down a little bit. At the moment, okay, we can see, hopefully, at the moment, the 20 period moving average is still acting as support. Okay, now of course we're only on Wednesday. That could change by Friday. But, I'm looking at that to see, is that providing support before we get a next move up? Initially, I think there was a lot of sell-off because of the announcement of Google's Willow chip, all right, which, effectively, is sort of competition for NVIDIA and other chip makers, etc. But, we will wait to see, does it have what it takes to basically stay above the 20 and stay bullish and positive for the American stock market. So, I'm just going to, of course, be watching that. When we look at the UK, we've looked at a couple of great stocks in the past in terms of buys, one of them being Rolls-Royce. But before we do that, let's just get ourselves updated on just a couple of minutes on the research terminal. This is a plugin to both MT4 and MT5 that you can utilize, okay, to basically do your research and help you sort of make better choices and better decisions going forward. So we're always interested, okay, always interested in, you can see all the opportunities you've got here in terms of what it can offer for you. Here I'm just basically getting news event data, okay, and it's coming in with its own guidance on that. You can see that, okay. It'll also give you an insight into which are the most popular assets, okay, which are the ones being most spoken about, because there are some people, especially momentum traders, who might be very sort of intrigued by that, okay, and looking at how they can do that. And you can get a little bit more in depth onto that when you look at the asset side. There's also a news element, okay? A news element powered by Dow Jones, which will give you a little bit of information, okay? And you can click on it. And of course, as we were saying, the Fed cuts interest rates again by a quarter basis point, but signal greater doubt over how much and how fast it will produce them going forward. That's the sort of thing that has just powered that US dollar to higher elements. That's interesting there, isn't it? And you can also look at the data about trending instruments, okay, as well. You've got the calendar, and you can use the calendar in both corporate and economic, okay? So to look at that. So, for example, corporate, I know that is on Friday, that is Carnival, okay? We've got Carnival, they've got their data coming out, Nike, and then you've got also, there's General Motors and someone else, another company I've been looking at myself, okay, this week. So you've got all of that there in terms of the corporate calendar, and also the economic calendar can also print it out there. Okay, so you can see what you're having to work with. Okay, to view. Peter says, interesting to see the dividends option in the calendar. Yep, that's absolutely right. Okay, if you are a long-term investor, okay, of course you will want to understand the the sort of dividend data, and also when they go things like ex-dividend as well. All of that is in the calendar to use. So by all means, make yourself aware of that. There is also a technical side, an element that you can look at for particular charts, and also one of the other bits. Okay, maybe I'm a bit as an FX boy, I'm perhaps a little bit biased, but there's also the Trading Central plugin here that is featured that you can use, and so you can set that up to basically to focus on particular instruments that you're focused in. So I've just said you can see it there: pound CAD, pound Aussie, pound US dollar. And actually, what you can do is it will actually automatically go through and find patterns for you on there. So for some people, that is enormously beneficial, enormously useful. Okay, so unfortunately, ladies and gentlemen, time flies when you're having fun. We've come to the end of our time tonight, and also for 2024 for our Market Pulse updates. I hope you have found that useful and given you a little bit of interest and a little bit of insight into what is actually still going to be a busy few days for us. Okay, it's going to be a busy few days. You can just see there the market's reaction to FOMC. We've still got some data coming out over the next couple of days. So as always, it's well worth knowing what the calendar is, what's the order flow, making sure you're on top of that, making sure you're managing risk. And hopefully you've just got a few things there that you could look at and take away and add to your own watch list. As always, thank you very much for joining me for not only this session, but the ones we've run so far for Admiral Markets this year. It's been great to have you along. We really appreciate the feedback. Peter says, that's great, Paul. Have a great Christmas and New Year. And the very same to you, Peter, okay? Very same to everybody. I appreciate we have a global audience, and many people will celebrate this time of the year in different ways. But, wherever you are in the world, okay, I hope you're healthy. I hope you're happy. I hope you have a very fabulous festive period. And I hope that you are ready to join us, okay, on Wednesday, January the 8th, as we shift our way back into markets in 2025. It's going to be an eventful year. And I hope you'll be joining us to go through that journey together. Take care, everybody. Trade and invest well, and we will speak to you soon. Thanks very much.